Okay, let me clear a chart and we'll do a little bit of drawings because I think what you guys fail to I think realize sometimes is what's it called? Like when to know when you're trading with structure and stuff. So let's draw out some examples here. Okay, so in this example here, let's mark up everything. Price takes out previous low. Okay. We get a retracement back up to the high, respect the high, move away. Okay. So some simple liquidity tracking stuff here. We understand that there's liquidity going to be above this high. Okay. After respecting the previous high, we move away. We now take out previous low. Let's just say we take out previous low, like I mentioned, and then also we take out something from the left-hand side. Okay. So essentially where buyers were getting induced from. So let's say there was like some higher time frame POI like this, tapped into it, gave a reaction up for retail. Okay. And then continued selling off, grabbing the liquidity from the left-hand side. Now that we've taken out previous low, grabbed liquidity from the left-hand side, and let's just say now we're trading in New York session. This is now when we're going to start eyeing longs. Okay. Why? Logically, we understand now that sellers, okay, entered the market in this area here, okay? And again, it all depends how you want to look at it. It's not too important, but I mean, obviously, there's a bunch of retail strategies out there. A lot of people could, again, simply just Fibonacci wise, it came all the way into their golden zone, moved away, so they're entering positions there. Okay, smart money. They see a break of structure, return to their order block, whatever it is. Just understand that since we have now respected these highs and moved away, understand now that this is now going to be a future target. Not only a future target, but most likely when we take this high, we're going to start seeing bearish reactions as well. Whether that's going to be a reversal or just a pullback, we should be getting some sort of bearish PA after taking out these highs. And the reason being is because now sellers have been induced. And then however we get back up there, whatever we do, once this is now taken out, we understand now that seller liquidity has been taken. Okay, so sellers are trapped in the market. So as we know from experience, once early sellers have been taken out, that's when we start seeing a move in the opposite direction. Okay, sellers get liquidated, and then the actual move will occur. So it's a basic thing of we see a buildup, okay, and then price will end up coming up, trapping that buildup, grabbing that liquidity, and then a move the other way. All right. So in this situation here, when do I want to look for buys? Okay. Obviously, you can start looking for buys down at the extreme, but what we have to understand now is we've yet to come up and tap this area. Okay. As we know, we've taken up previous low. So this could be false reaction. Okay. Maybe there was some internal over here that we swept. Okay. Printing some sort of liquidity block as well. So again, we just understand that we've taken up previous low. Sellers are induced. So this can now be used as an area that sellers are going to want to take entries from. Okay. Just stay aware of that. So another thing you can look for is, let's say before we printed this, or sorry, actually, when we printed this high and started selling off to the downside. Okay, let's say we left some internal highs like this. This is now going to be an area that we can be seeing price trade into. Okay, we've left seller liquidity here. All right, same concept always applies. Look, take out previous low, price returns back to this high. Even draw it as a little red box. Price returns back to this high, okay, trades into it, inducing sellers, and moves away. Okay, so from a retail standpoint, again, look how price respects their POI. Okay, so price trades up, respects their POI, this red box here, okay, and then starts moving away, and then they have this internal move here. So there's going to be positions being added into the market here. Seller liquidity is just going to be added. So again, this can now be an area where you can see price trading up into. Okay, once we're trading down here, Now, am I saying that as soon as we trade below these lows to immediately look for buys? It all depends, right? Because sometimes we'll leave an internal high and then sell off. Okay, and then what happens is we immediately run up, take out this high. Okay, and a lot of you guys are gonna, well, a lot of people are gonna start looking for buys, especially retail, because they start seeing BOS in the market. Okay, and let's say the market comes down like this, prints a high. Okay, and again, draw a red box here. Retail wants to see reactions here, and that's exactly what the market does. Okay, comes up, let's just say prints up an internal low and pushes higher. Now, this is even when you guys start getting a little bit antsy because you're like, we've taken out this high, so maybe I shouldn't be trading. But what we've done now is we just printed an entry for us. Okay, so a lot of you guys, and I've seen it in the chat multiple times, you guys start like thinking, maybe when price comes down here, I can take this buy. But you fail to realize you're literally just trading with the buildup. Okay, and then that's when PA gets really ugly. It'll start doing things like this. It'll come up, maybe induce higher once more, and then you're in profit and you're sitting through all this type of PA. Maybe it induces higher once more like this, and then boom, you're a part of the buildup. Just understand that this is when FOMO comes in for a lot of you guys. Common mistake, 100%. You have to understand because what you guys are like, what's the way I can word this for you guys? Subconsciously, when we're trading down right at this point down here, immediately you guys are like, okay, everything's happened that I want to see, right? I want to see price go bullish. We have highs we can target. We have all these confluences of price going up. So you guys immediately start like focusing up so much, and you're like, I need to take buys, I need to take buys, I need to take buys. And then that FOMO kicks in. You start seeing price kind of induce you, see some sort of entry model, but again, you're forcing it. Okay, you're not letting price fully align, letting the lower time frames align. And then you guys start getting antsy, right? And that's when these early L's get taken. So just understand that, first of all, you don't always need to catch the bottom. Let's say price ends up just starts running. Okay. The beautiful thing about understanding where liquidity is, you just let the market build liquidity again. Okay. Let's say it does this, pushes all the way up. And then right at this point, you're like, oh my God, I missed the move. Right. Or you're like, you were waiting for price to come below this low, and you're like, oh my God, we respected it, and now we've continued higher. That's fine. Because remember, the market just goes from liquidity to liquidity. So right now, in this current state, it should run this high. And let's just say it gives us another false reaction down. Perfect. This is probably going to give us an opportunity to buy. And the market comes all the way back down. Let's just say it does this, respects, comes higher. And now we're going to hunt that liquidity. Boom, your buy entry. So these kind of entries are so much nicer because now there's just a shit ton of liquidity at the highs, right? Where else does price need to go? Where is the current liquidity? There's no reason for us to come back down here. There's no liquidity there right now, right? We built liquidity here. We have a nice imbalance down here, a nice liquidity block that we can respect. Anywhere below here is going to be a beautiful buy, okay? And I'm not saying this is the golden key that we're going to win trades like this 100% of the time. There's going to be times where the setup doesn't work. And the reason why the setup probably didn't work is because your direction was incorrect. Okay, your bias was incorrect. So I get a lot of pictures sent to me where the lower time frames look so good. Your entry model is textbook, but it doesn't work. And they're like, Marco, why did the entry not work here? Simple solution to that is just zoom out. Your direction was incorrect. Okay. So maybe what could have happened was maybe we didn't take a low from the left yet. And you guys are starting to look for those buys, thinking that these need to get taken. Okay. What can happen is, let's just say, let me remove these lines here. Okay. Let's just say the entry model, this lower time frame looks so good. You guys take this buy here and it goes up. You're like, perfect. We're going to run this liquidity easily. And then it respects the high. Okay, it comes back down to the low. Like, okay, maybe you want to add more here because you're like, it's a liquidity block. Let's add more. And then it goes up again. And then boom. And you guys send me the chart. You're like, oh, but Marco, like, entry looks so good. Everything looked good, but like it didn't work out. Why didn't it work out? Your direction, your bias was incorrect. Remember, the higher time frame is always what holds the most weight. Always. So you simply just got induced. You let the lower time frames get induced. Let the higher time frames align. Stay patient, because all that you were incorrect on here was nothing was taken from the left. Now that something was taken from the left here, you can start looking for your entry. So let me move all this over. Boom. Now that we've taken out that liquidity from the left-hand side that buyers were getting induced from, like that, buys now are, look how beautiful this is, right? Liquidity taken from the left-hand side, shit ton of liquidity left at the highs. There's no other place price needs to go but higher right now. But again, a lot of you guys will let price induce you. So let's just say again, there was an internal high left here. So we go lower, we come up. Actually, let me do it like this. Now, a lot of you guys will be like, hey, I want to take a buy here. Just understand again, you're trading at the extreme. You don't need to always catch the extreme. If you ever want to catch the extreme, you always want to wait for buyers to get trapped in some way, shape, or form. Okay. So again, a lot of you guys will take buys right here. Okay. But understand you're just part of that lower time frame buildup most of the time. Okay. 90% of the time. Price will go up. You get your reaction perfect. Okay. Maybe it even comes, prints an internal low, comes higher, mitigates this liquidity block, and then sells off. Boom, you guys take another entry. And then it goes higher, mitigates this liquidity block, and then boom, all your buy entries are taken out. And then all of a sudden, it's stock open and price just goes boom, all the way to the upside. Because you guys couldn't stay patient and understand that this is just going to be a buildup of liquidity. Okay, so just be patient, okay? So like my best tip is like when we're trading at extremes, especially, understand that you don't always need to catch the very bottom. If you do want to catch the bottom, my best advice and my best tip would be be a little bit more greedy, be a little bit more patient. Okay, let price play out a little bit more. Because listen, it's so much easier looking for extremes once price has done this. And you were able to sit through all this and understand that cool, this is just going to be a build up. Boom. And then now we've trapped all that liquidity at the lower time frames here. And then we come up and you wait for that entry to occur. We wait for, again, the same sort of thing. So let's say we come up like this, and then we have a buildup, and then a false move up. And then a lot of you guys are like this. Let me move this over a little bit more. But Marco, we've taken out this high. I can't buy anymore. What are you talking about? Look at all the liquidity we've got to the highs. Okay, always ask yourself, what's going to be the next objective? Where does price need to run to next? Okay, this wasn't a good buy for sure, because what price did is it induced buyers using this as a breaking structure. Okay, then once it's sold off again, now it's induced sellers. All these are going to be traps, all these areas, if there's going to be reactions. Okay, so this would be a trap. Why? Look up, look at all the liquidity. Why would this work out for? Why would the market need to respect this and continue selling off? There's no reason to it. Okay. And then all of a sudden we take out this liquidity here. Where do we see liquidity right now? Boom. Early buyers left in the market here. We get a false sell-off down. Anywhere below this low is going to be a buy. How big our stop loss all depends on how big the liquidity block is going to be. So in this example here, our stop loss would need to be like this. Entry, stop below liquidity block, and target. Boom. Does this make sense to you guys? This is where a lot of you guys get induced on the lower time frames. And I'll get like Nuno was a good example on EU yesterday, late New York. Does this stuff make sense to you guys? Just a little yes will help me out. Brother, don't delete. Uh-oh, David, what are you going to do here? I'm going to delete some of my drawings here. Yeah, it is, sure. And that's why it went long for a little bit, probably to hunt some internal liquidity right here. This is like basically our model is in this PA here, but it's like on the 15-second chart, if you want to say that. Like zoom out, understand that we've just taken out higher time frame liquidity. This is going to be a buildup. Okay. Sometimes the buildup happens over here. Like we'll have the market will come up down like this, run up like this, induce buyers, trap, and then maybe look for an entry down here. Okay. Sometimes it happens before the low is taken out, or sometimes it all happens below the lows. You just have to follow the money around. Like always add more logic to your analysis. A lot of people will become like kind of pattern traders. But it's so important. Like pattern traders, don't get me wrong, if you have a system based off one specific setup that's kind of like a pattern, that's fine. But it's important to add logic because the more logic you add to your analysis, the more consistent you'll be on predicting bias and direction in the market. Okay, because sure, the same thing happens over and over and over. But you need to always need to identify where liquidity is going to be using logic, obviously. Okay, but this is a killer for everybody. This is where everybody gets induced. All right, always ask yourself, where is liquidity right now? Where should we be running to next? Hope this makes sense to some of you guys. All right. Cool. I'm going to give the floor to you guys. You guys let me know what else you want me to cover. We can go through some pairs. So it's better than the price to bottom. It doesn't always need to have an imbalance. It all like okay, so a liquidity block is just an area, a high or a low that has taken liquidity, and it tells us that there is no liquidity below this low. So this low here does not need to get ran. Okay. Once it gets respected and we move away, now there's going to be liquidity below here. But there's a reason why you want to catch these reactions. Okay. These lows, these are what we want to catch because that's where the market will react from because there is no liquidity below this low. Now, as for imbalances, all the imbalances do provide you an opportunity to get a more refined entry. Okay. Sometimes if you look, I don't always want you guys sitting on the 1 minute chart unless you're very like on the more experienced side of things. But you'll see sometimes in the 1 minute, not even on the 1 minute has an imbalance. There's going to be an imbalance there on like the 30-second chart or some shit. But I don't need you guys, like, I want to keep it as simple as possible for you guys. That's why I never really even dive into the imbalances, into the liquidity blocks, because realistically, all you need to be doing is taking that buy once the liquidity is taken. So in this example, we're buying once the low's taken. When we're looking for sells, once the high's taken, you should be taking that sell entry. Mm-hmm. Always. It's important to just understand the logic of a liquidity block, right? That's where you want to be taking entries off of. Okay. Literally, your entry should be off a liquidity block or at the creation of one. So sometimes, let's just say this is a 15-minute chart. You could be looking for a 1 minute entry model within the creation of this liquidity block. Get what I'm saying? So, boom, you can look for an entry here and continue up. Okay. So essentially, always add a liquidity block, the creation of one or at one to the left-hand side. So in this example here, there's one to the left-hand side, buy, boom, all good. Okay, always add a liquidity block because then understand the logic of the reasoning behind that is the liquidity block provides us a reaction because there's no liquidity above that high or below that low. As simple as that. Okay. Make sure that's set in stone in your plan. Every entry equals at a liquidity block, please. Euro, interesting spot. If I had to pinpoint where this thing is going right now, oops. Um, should be running back up here, right? Looks like we should. Looking back at the, see, honestly, I want to start looking at EU a bit. I remember that there was that drought of like a month or a month and a half of when EU was just really, really nasty. So I stopped kind of looking at it a bit. I want to start focusing more back on EU. Um, but yeah, like looking back at this sell, guys, this is a clean sell. The problem is I don't think we had much of a refined entry up here, right? We'll check it out. But as for the higher time frames, took a 4 hour entry. Honestly, you can't go wrong with that. Because listen, understand this. If I took away the time frames here and you guys didn't look at this as a 1 hour time frame, let's say this is a 5 minute chart, a lot of you guys would probably take the entry right above this high. Okay, on like a 5 minute chart. So why not do it on the higher time frames too? Just play the time frames that are that make the most sense at that current time. Right. So if I took away the 1 hour time frame right now and I told you guys this is a 5 minute chart and you guys believe me, you'd probably take this sell up here. Understanding we have induced sellers, trap them. There's probably some sort of buildup right here, right? And you're taking that sell. Exactly. So why not just play whatever time frame is the most clear. So I believe this was quite early. Yeah, it was pre-New York. So let's say you were able to take an entry like this. Once this high was spiked again, your stop goes above. I think you can still sneak out a 1 to 3. Almost. So maybe you wait for price to come a little bit higher. But hey, that's all you need. Like if you have 1%, it's still 3% on this trade. Sure, it took a little bit of time to play out, but you just play whatever time frame makes the most sense at this current time. So, but yeah, nonetheless, direction wise, this is super clean, right? Look how, again, the most important part to this, don't forget, we induced sellers here. Okay. And then we sold off. Okay. Respected this liquidity block. So again, we're talking about liquidity blocks. At this current moment, there was no liquidity here. So the market respected it, moved away. Boom. Now this is going to be a place to target. Okay. A place that the market should see reactions from as well. Look, the market ran it and reacted. Why did it do that? Because there was liquidity there. Okay. We don't just pick and choose random highs and lows. We have to understand where liquidity is going to be sitting in the market. Okay. We talked about on the live call on Thursday that we do want to see price below here. Simple stuff, right? Look how we respected it here, it moved away. And then over here, moved away. And then price started after a couple of weeks, we traded all the way back down to the lows. Look how we respected it again, moved away. We're going to want to see price come back down here. And that's why there was reactions. Now that we've seen reactions out of this liquidity block, we've taken liquidity at one side of the market. Now we're probably going to hunt for liquidity on the other side of the market. Okay. Now just simple stuff again. We've taken out this internal point. So retail is going to see this as a BOS in the market. Let's go to lower time frames, 15 minutes. So if the market can respect the highs up here and move away, it's going to provide us what? If we come up here and respect the highs, what is that going to provide us? An opportunity to buy. We can look for buy setups all the way back up. Sure, this could maybe be a low. We just have to react and see where price builds at. Okay, like if we come all the way down here, boom, take out that high. Why is this important? This was a liquidity block down here, which again that's why I provided a reaction for us. Now that we've reacted off it, there's going to be liquidity where? Below here. And coincidence, what's below this low? Liquidity block. So that's why it's important. A lot of you guys are like, oh, where's the market going to head to next? I'm not too sure. But once we do build up liquidity in the market, oops, it's just so much more clear, so much more easier. Boom. Why is that important? This is important because buyers have been induced. Retail sees this as a move up, BOS, cool. Price comes back down into their POI. They get a false reaction up. Oh my God, look, BOS again. Now this is going to be another opportunity for them to buy. Okay, so let's say the market these are great sells when this occurs, because now what you can wait for is we get a BOS to the upside, which creates a liquidity block. We start moving away. Let's say we build some sort of liquidity like this. This is a beautiful entry. Take the sell, stop loss above liquidity block, and boom, down to the liquidity. Okay. Once that occurs, most likely head all the way back up. Why? We've just trapped buyers. Okay. You have this whole confluence of look at this liquidity we've left, and then the higher time frame. Boom. But this is just an example. I'm not too sure where price can be head to next. I need to see where liquidity's built. Simple as that. I can see the higher time frame where we built, but in order for me to take an entry, I need to see the lower time frames. Give me one, right? Cool. Man, that sauna kicked my ass. I feel so drained right now. Um, cool. That's euro for me right now. Again, I'm gonna start paying some more attention to euro. I do kind of when it is clean, like when it's moving, it is a great pair. David, I'm just gonna continue on for now, brother. Aussie, same thing. Great sell. Unfortunately, again, I went through on the live call why I wasn't able to get into the market, and that's just because it's something with my plan. I anywhere above this high was a good sell. The problem about taking it right here for me, according to my plan, like it could be different for you guys. Um, Stop loss has to cover this liquidity block, right? And if I held to my target, it was only 1 to 2.5. And per my plan, it's just nothing I'm interested in doing. I always want to be waiting to at least minimum 1 to 3. Okay, 3 times what I'm risking. And again, that's just for me. You guys find what works for you. But that's exactly the reason why I did not end up taking this trade on yesterday. Right? I told you guys that sure, if we came up here and came a little bit deeper, which would have been able to shrink my stop, that would have been a trade I could have took. Fortunately, direction was perfect, but the entry I just couldn't take, which is all good. It is what it is. It'd be like that sometimes. But yeah, if you look at AU's in an interesting spot too right now. Let's go from the higher time frames down to the lower time frames. Low taken from the left hand side. Cool. Let's go to 1 hour. Before taking out that low, look what we've done. Induce buyers. Okay. Price comes back down. Look where we've left liquidity at the lows. Cool. We come back down, take out previous lows, and then grab that liquidity from the left-hand side. All right. Now, this is an interesting spot now. Okay. So if I ask myself, where do I see liquidity right now? Since we have taken out previous lows, sellers are induced, right? So look what we've done. We've built liquidity in this whole area. Okay, so I understand that we now have liquidity here. I'm a little bit stuck since we're at a higher time frame extreme. Okay, we just grabbed this internal, so this is throwing me off a bit. I think this is still on the cards. Come down to the low, but I'm just gonna have to wait and see. I can see now. Another thing we've done is same thing applies. Buyers induced. So there's going to be liquidity. Look to the left-hand side right here. We come down, take out previous lows. Not only that, we grab the liquidity from the left-hand side. So that's why we're going to see some sort of reaction right now. Where are we going to go next? I'm not too sure. We could maybe just have a short-lived buy. Maybe it comes back up here, traps liquidity here, and then continues off. Okay? Just have to play from liquidity to liquidity. As of right now, all I see is a liquidity block up here, possibly. Okay. Maybe price comes up, build some sort of, we have some sort of build up, respects the high, moves away, and then you can start maybe looking for some buys up into the high here. Okay. So step by step, right? Just follow that money. But as of right now, that's my outlook on AU. Interesting spot though, because if we do end up going bullish, we have quite a ways to go. But another thing I'm going to keep an eye on is if we look to the left hand side, we have so much liquidity. Let's go to the daily actually. Definitely a possibility. All right. But yeah, we see. UJ talked about it. I think it was last week webinar, I believe. I had a nice or was it? No, I think that was GJ we were talking about. But yeah, UJ grab some internal here after a very bearish week. Okay, then the next week opens up, we spike previous week's low. Maybe run up to next previous week's high next. That's just an added confluence. We'll see what happens. Lower time frame wise, see what liquidity is looking like. Look, we're starting to build lots of liquidity to the downside, right? Like if you take a look at this, nothing too pretty right now. Trading so high on the higher time frames, right? I'd want to see price correct back down. Again, we just had a very bullish week closure, I believe. Yeah. So it's definitely possible to see price come all the way back down and maybe fill this imbalance as well. God knows. But after a big bullish week like this, sometimes it's best to let this whole week literally consolidate maybe. And then we'll have a watch if I draw it like this. I got Riz calling me right now. What's this guy doing? Here, wait. Riz,
So,
I'm on a webinar right now with everybody. Say hi.
hello, hello. What webinar you did? What's that?
Yeah, no, because I did live call yesterday with them, so I told them we'll run the webinar today on Saturday.
Nice.
I'll give you a call back right when I'm finished. All right.
Right.
Okay. Ciao.
Okay.
Um, let's see. Black. That's not black. Okay, so there's a fat candle, guys. Bear with me. Let's say the next week is something like this. Then maybe the next week after that opens up, we spike previous week's low. Okay, again, you always want to pair this with liquidity, right? It's just an added confluence. Spike previous week's low, build imbalance, and then just continue up. You get what I'm saying? So as of right now, big bullish week. Next week is most likely gonna be a little bit probably rangy. But yeah, just have to wait and see. After big, but you just have to understand, like we just had I mean, how much of a move is this? And this is like again a way to just predict the next week's candle. 400 pips we've had on the previous week bullish. What's likely for the next candle to do? Probably range, print us a high and low of the week, and then you have that range to go off of, right? Like more essentially, it's just going to be buildups on the lower time frame, more liquidity in the lower time frame. And once we have more liquidity, we're going to be able to build a more confident bias. Okay. But yeah, probably going to see this pair run higher. Look how we've taken out this low down here. This is most likely going to be a trap once we get to the high. If we give false reactions, we'll see. But yeah, we see. And then again, the indexes, I won't even bother looking at them, guys. These things are on the moon. For anybody trading these things, I don't recommend, at least right now. Let them chill out a bit. All right, guys, the floor goes to you. The floor goes to you. Gold. We didn't look at gold yet. Wow. I hope if we can get some good entries on this pair before we continue, before we hit these lows. I'm hoping we do, but maybe not. Look at this massive buildup we had. Higher time frame build up. How long did this take? We were trading essentially in this range for 13 and a half trading days. Just imagine the amount of liquidity that's built here on the higher time frames. Look how we induce higher. take out previous structural point, this previous external point, inducing buyers in the market. All these are going to be traps, right? All these imbalances, these order blocks, these POIs for retail, all traps. Okay. And if it does give reactions, perfect. It's just an opportunity to ride that wave back down. All right. But as of right now, look, every single 4 hour candle is just continuing down, 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 down. You just have to wait for these lows and highs to print some structural liquidity, whatever it is. Just need some buildup. We see. Hopefully, if gold can go bullish a little bit, there should be some good entries to sell this thing back down to these lows. That'd be nice. Not only these lows, probably back down here to these internal points, maybe over here. Look at this, all this liquidity left to the left-hand side. Could be good. Could see some big freaking moves on this pair, man. Some swing entries. Cool. All right, guys. Any questions? Let me know. When it comes down and so when it comes down and didn't do any build. David, I'm gonna like you know the answer to that. What do you think? If it didn't do any build up, you know the answer, right? I know you're just looking for confirmation, but I know you know it as well. It's all good. Remember, just build up, run of the build up, and continuation. Trade the other way. Perfect. All right, guys. Any questions before we wrap up for the weekend? Next week, full week of live calls, at least 4 of them. My goal is to I want to get 4 in every week, 4 live calls in every week. But yeah, that's the goal. Still an inducement. It's all situational, bro. Like again, a BOS, a break of structure, is just a pattern, right? It's a pattern that retail uses, which ends up being a form of liquidity for us. So again, it always comes back to just I can't. It's hard to answer that question because it all depends on where liquidity is in the market at that current moment. It's a very like vague, very broad question. Would we assume even the smallest BOS on a lower time frame is still an inducement? Like according to the diagram we were talking about at the very beginning of the webinar, 100%. Yeah, guys. Any questions? Sorry about be running this one a little bit late. I completely freaking forgot since it was a Saturday. Usually, the last couple weeks have been Fridays, right? So my brain farted today and forgot we had a webinar today. How you guys liking the live calls though? Those all right? We're gonna keep going with them. Probably, yeah. Like I said, my goal is to do 4 per week. Um, yeah, I think it'll benefit everybody. So we're gonna keep running with them. Good stuff. Good stuff. Good stuff. All right, guys. Probably gonna wrap up here. Hope you guys have a good rest of your weekend, wherever you guys are at. Morning, nights, evenings. I know David over there, it's really late for you. But yeah, I hope you guys have a good rest of your weekend. I will see you all back on Monday. We'll be having our live call again. What's news looking like? We're coming up to Christmas time, guys. So, all right. Next week. Monday, we got a good amount of news through all sessions. US or for a New York session, 9:45. Tuesday, we got some news. Regular time, 8:30. Canadian CPI, that'll shake the Canadian dollar up. Wednesday, FOMC. Damn. Okay, so lots of news this week. Wednesday, FOMC in the afternoon. Thursday, this usually moves the market quite a bit as well. Friday, okay, so we got news every single day. So live calls will be fun. Interesting. All right. But cool. I'm gonna wrap up here, guys. Um, thanks, guys. No worries, guys. I hope you guys have a good rest.